You're watching Money Talk Viewpoint, and I'm Chantel Leeson. Successful businesses have one thing in common, and it's the right clients, prospects, and customers. And before I get started, now I want to introduce my entire group. AK Pandy's in the background. You won't see him, but he's going to tell us how much time we have left, because when you're having fun, you run out of time. Stuart Cruz is my co-host, and my guest speaker is Jason Mine, and he'll be the last one I'll introduce. Before we get started, I want to thank everyone for being here today, particularly those of you who are with schools, high schools, and colleges who are looking to move your children forward into a very successful life and very successful career. Thank you for being with us. Now let me introduce my co-host, Stuart Cruz. Stuart is a chartered financial analyst. He's a quant investment advisor, a TEDx speaker, a published author. Stuart is also a venture capitalist and is a CFO for Virtual Family Office. Stuart, thanks for being part of our team.
Thanks for having me, Chantel. Sounds like that introduction is more than I deserve, but I appreciate it.
No, I think you're a great guy. You know, I want you to tell the audience the difference in a family office and a virtual family office.
Family office, I'm sure you're aware, the concept came, I believe it started with the Rockefellers. And what it is when somebody has, or a family has so much money, they can afford to hire a team of financial professionals like myself, CPAs, estate planning lawyers, tax mitigation specialists that are on their staff that can help basically reach their financial potential, right? But most of the people don't have that kind of wealth, because you can imagine with that staff on board, and somebody, if you're looking for the best of the best, you could really have a multiple million dollar cost per year. So in order for you to justify that cost, you should probably have in the neighborhood of 300, 500 million or more to actually have a real family office that is working as a team on your assets to make your assets work as efficiently as possible. Now, I don't know about your clients, but I don't have a stable full of those kind of clients. They don't have their own family office. My clients are millionaires, but they usually don't feel like they have enough money to, just retire and hire somebody full-time. But most of my clients need some of those services some of the time. So that's where a virtual family office steps in. You can be proactive and give them the family office services that they would enjoy if they had their own family office, but certainly not at that same cost and pretty much at their desire and an as needed basis.
Okay, I want to ask one other question. How does that differ from just a financial advisor in private wealth management? Can you share that with the audience? Because a lot of people go to a private wealth management practice. You and I both work for major firms, and that's not the same as a family office advisor. Can you share the difference in that?
Sure, and the distinction is really important. And I'll even tell you, for the first, call it 15 years of my career as a wealth advisor, of course you want to service the clients in the best way possible. And I worked in those big bank environments before. But the compliance is such that they need to make sure that the firm isn't doing anything wrong. So a wealth advisor generally works in their own silo and in their own eco center to the extent that their company will allow them. So I know whenever I had a client and they were asking me advice on, let's say, insurance, which I don't sell. I'm actually licensed to sell insurance, but don't sell insurance. But I know I would get protective of my client's assets and start to talk, maybe not in the best proactive way for my clients, but how can I protect my own relationship with my client? And then
if I have a $300,000 mortgage at 6%, I'm going to be paying $347,000 in interest on top of the $300,000.
So what it looks like is that for the average person that we're not aware of, that a $300,000 loan actually becomes a $600,000 loan in payments.
That's exactly right. Well, so just imagine if you didn't have to make those payments, if you didn't have to make those interest payments. Well, imagine if you were able to cut that interest cost in half. And you can do it without changing your
Yeah, I have a lot of experience on both sides of the franchising business and love helping people get into franchising or do a better job once they're in franchising and help them make a lot of money. So a good thing, an exciting thing with franchising is that it gives you a chance to build generational wealth. Usually that to do that, you've got to own multiple units of a franchise, but you can do very well owning one franchise depending on which franchise it is. And you can also, if you just want to be in business for yourself, it's really for yourself but not by yourself, because you get a lot of help from the franchisor. You can buy a business
consistency in the market is twofold. So I was able to create a software program that helps you analyze the market. In other words, the market moves in different stages and phases. And so when you can capture those stages and phases, it makes it easier. But not only that, but the education that's outside of the charts is really what makes the difference. We hang our hat on our ability to interpret the intentions of the market maker. So most people who trade, they don't know the market maker. They haven't even heard the term market maker. And if they've heard the term market maker, they don't have any idea of what's going on. And that's tantamount to a quarterback not preparing all week. He does not know what the front, he does not know how they play on the back end of the defense. He does not have a clue if they gut blitz, if they blitz from the end. Do they bring 6? Do they bring 7? There is no way a quarterback can be successful and he has not studied the defense. So most people who try to trade, they're so busy studying the offense, the candles and the candle patterns and the trend lines. They are not even paying attention to the defense, and they don't know
What happened. And I started looking at all the different characteristics to see if there were any statistical advantages in the marketplace. And I said, if there are these advantages, why not just buy those stocks? Let's forget all the other stuff and just buy the stocks with those advantages. Now, I'm not going to be right every time, but in theory, I should be right more often than I'm wrong. And my invested.
The talk show for family office and high net worth professionals. I'm Chantel Leeson, your host, and Tony Katrup is my co-host. Tony, say hello.
Hi, how's everybody doing today?
Real big on holistic, right? What can I do to really uplift the kids, lift up the kids, so that their leadership skills, their leadership coaching, life coaching, career coaching, integrated with college counseling, so make them powerful, as effective as possible in the personal operating system. And so I left my previous company pre, during, post merger for after 6 years, and founded 3EQ because I want my Saturdays and Sundays back. Right, working in the previous company, I had to work full time on the weekends, not so fun. And I left them about 11 years ago. Today, I'm much more selective when I take on clients that are primarily, families run by powerful CEOs or C-suite leaders. I tend to
find a lot of times, Chantel and Tony, with wealthy people, they don't have that many options for tax-free retirement. There's really only 4: Roth IRA, permanent life insurance that's properly structured, health savings account, and reverse mortgage. And what I find is, when they have their home paid for or a lot of equity in their home, their equity is earning 0 return on investment. It drives them crazy. And they can't access their equity without a mandatory monthly mortgage payment, either a HELOC or a monthly payment. So what we do is we help them get a reverse mortgage line of credit where they can access on a $10 million property up to $4 million in home equity. There's no restriction on how they can use their funds. So some people buy a second home. Some people help their kids, our grandkids, or help charity. So basically, it's wide open how they can.
In the business owner space, which overlaps a lot with the family office space, I work with clients to prepare succession plans if they do intend to plan to turn over their business to family members, or if they want to have another exit strategy. I'm familiar with doing those as well. And we can also put in place shareholder agreements and buy-sell agreements that will, facilitate transfers and exits that are anticipated or, can be predicted. And I'm able to work with clients who want to do another exit strategy other than leaving their business to family members, if that's what they want to do. But at first I start with asking general questions that I would ask of pretty much anyone about what they want to do with their wealth, how they would like to transfer it safely and preserve it, and put together the answers to the questions every good estate plan needs to answer, which are who gets what, how and when do they get it.
Welcome to Investing for the Unpredictable. I'm your host, Chantel Leeson. We're the online talk show and financial education series for investors, for those who are learning how to invest, and for financial professionals looking for a place to market their services.
Smart Money Network started as basically an idea to share what I'd learned about social network marketing with other financial presidents.
We basically teach entrepreneurs, business owners, CEOs how to attract, how to raise investor capital so they can build, buy, or scale the business.
Bare bones basic structured product might be something that is principally protected. So in order to walk you through this, like a CD, it will have a maturity.
Beautiful things about franchising is you don't have to have prior experience in most franchise businesses.
You're looking over actively a human being who's doing the active picking of assets for you. In that category, you have mutual funds and hedge funds.
I have access to what's considered as a great entry point for people who have no knowledge or very little knowledge about cryptocurrency.
This is a show a lot about money. Many people don't realize that money is about emotions.
Content. The newer social medias right now that are incredible for small businesses are going to be LinkedIn and TikTok.
But really anybody within the financial industry. So it could be a realtor, it could be a bank, a credit union, an accountant.
Are you maximizing those high-paying patients, insurance companies? Are you trying to negotiate with the lower-paying ones?
Find what is it and where was it you wanted to be in the future? How much would that cost in today's dollars?
We have to get really creative, and it's forced us to get creative and provide tools and resources and little outside of the box thinking to help our buyers.
That's what this does. So it doesn't matter what your income, what your expenses are. We even have people utilizing it who don't have debt. They just
and a very prosperous 2022.